Singapore just dropped a budget that could reshape your investment portfolio, and I'm not talking about hawker center discounts. Stick around because we're breaking down exactly which SGX listed stocks could ride this policy wave and why they're primed for growth. Fun fact, the investing Iguana was ranked 8th in Tiger Broker's 2024 Influential Tigers, thanks to all of you. With over 768,000 reads, 53,000 likes, and 700 videos, clocking more than 300,000 watch hours, this channel is all about helping you make smarter financial decisions. Today we're cracking open Singapore's 2025 budget like a fresh durian, revealing the juicy opportunities for SGX investors. From green energy to retail, we'll cover it all. Ready to dive in? Let's roll. Let's kick things off with Singapore's banking giants. Imagine running a small business like a bubble tea stall. The government suddenly says, hey, here's a 50% discount on your taxes this year and we'll help you get cheaper loans. What would you do? You'd probably expand your shop or buy more blenders, right? That's exactly what's happening with Singapore's new corporate tax rebate and the SGX $1 billion private credit growth fund. Now, who benefits most from all this lending? Our local banks, DBS, OCBC, and UOB. When businesses borrow more money, banks earn more interest. DBS already smashed records last year with an SG $11.4 billion profit. That's like earning SG $31 million every single day. Their shares recently hit SG 46.38, and with this new credit fund, I wouldn't be surprised if they keep climbing. Think of it like a durian buffet. More hungry customers mean bigger profits for the banks. But there's more. The government is also giving tax breaks to big fund managers who invest in SGX-listed stocks. This means more institutional money flowing into bank stocks. It's like adding chili sauce to your kaya toast, extra flavor for your portfolio. Next up, shopping malls and REITs. Remember those SG $800 CDC vouchers everyone's getting? Picture 3 million Singaporeans hitting Orchard Road malls with free spending money. Who owns these malls? Companies like CapitaLand Integrated Commercial Trust and Fraser Centrepoint Trust are major players here. More shoppers mean higher rents for their tenants, which translates to fatter dividends for REIT investors. And here's where it gets spicy. Paragon REIT, that swanky mall on Orchard Road, just got bought out in a SG $278 billion deal. Their units shot up 11% overnight. This is like when your grandma's old apartment gets en bloc sold. Suddenly, everyone wants a piece of the action. Keep your eyes on other REITs too, like Mapletree Logistics Trust or CapitaLand Ascenda's REIT, which are positioned to benefit from enhanced CPF investments in diversified assets. Let's talk tech now, because Singapore is doubling down on semiconductors and advanced manufacturing. Did you know your phone has tiny brains called semiconductors? Singapore wants to be the world's factory for these silicon chips and is pouring SG $1 billion into chip research as part of its push toward becoming a global tech hub. Companies like AEM Holdings and UMS are key players here. They make the tools and parts needed to create these microscopic marvels that power everything from smartphones to AI systems. Here's a tasty analogy. If Intel and AMD are chefs cooking up gourmet burgers, AEM supplies the patty presses and lettuce shredders. With Singapore's new Enterprise Compute Initiative, a SG $150 million program to slash tech costs, companies like AEM could see lower production expenses while demand soars globally. Now let's get green because sustainability is no longer just a buzzword. It's big business. Semcorp Industries plans to triple its renewable energy capacity by 2028, with projects ranging from offshore wind farms to solar energy solutions. The government is backing this transition with a massive SG $5 billion boost to the Future Energy Fund, which supports clean energy infrastructure. But Semcorp isn't alone in this game. Keppel Corporation is also making waves with its floating solar farms and sustainable infrastructure projects. Picture solar panels bobbing on water like high-tech lily pads. These companies are positioning themselves as leaders in Asia's green revolution as countries scramble to meet carbon reduction targets. Let me ask you something. If the government matches your MediSave contributions, wouldn't you finally get that health checkup you've been putting off? That's exactly what the expanded matched MediSave savings scheme does, encouraging Singaporeans to invest in their health. This is great news for companies like Raffles Medical Group and Singapore Medical Group, which could see increased patient volumes thanks to these incentives. But here's where it gets even more exciting. Biolytics is developing AI-powered tools that can detect cancer from a simple blood test. Think of it as having a 24/7 security guard for your health, spotting problems early when they're easiest to treat. Imagine getting SG$800 in vouchers to spend however you want. Where would you go? For most folks, it'll be supermarkets like Shengshong or cold storage owned by Dairy Farm International. But here's the fun part. People tend to spend free money more freely than their own savings. That OCBC massage chair you've been eyeing, suddenly it feels affordable. This voucher effect is like giving kids candy money at a sweet shop. Retailers should see sales pop up like popcorn throughout 2025 and 2026 as these vouchers are gradually distributed. Timing your investments in consumer staples or discretionary retail stocks could be key here. So, what does all of this mean for investors? Prime Minister Wong has made it clear that Singapore aims to be Asia's innovation hub while supporting sustainability and economic resilience at home. That means companies aligned with banking, tech manufacturing, green energy, healthcare, and retail could be long-term winners. But here's my advice. Don't rush into buying everything at once just because it sounds exciting. Budget measures take time to roll out, so start by building a watch list of potential winners like DBS or Semcorp Industries. Ask yourself, do I understand these sectors? Am I comfortable taking on some risk? If you're new to investing, maybe start with stable REITs or banks before exploring higher growth sectors like semiconductors or green energy. And remember this, even small but consistent investments can grow into something massive over time if you stay disciplined. As a follow-up to this Budget 2025 series, I will be creating deep dive videos to deep research into how the Singapore Budget 2025 will benefit each of the listed company here. Drop me a comment below. Which sector excites you most? Banking brains, mall moneymakers, or climate crusaders? Don't forget to smash that like button if you enjoyed this breakdown and subscribe for more wealth growing tips right here on the Investing Iguana. Until next time, keep those investments juicy.